Smart money concepts is unarguably one of the most profitable strategy in trading. Concepts like the order blocks, break of character, and many others have become a song in the mouth of many traders, but they are way too complex and difficult for many traders to understand. It's because of the way they are taught and explained, with too many confusing concepts that keeps traders wondering. And the simple truth is that they are actually very easy to understand, only if you know the secrets locked in each of the order block strategy. As you place your full focus on everything that I will be showing you in this video, down to the last secret, you will be discovering a lot of secrets which a lot of traders don't know about order blocks and smart money concepts as a whole. Abraham Lincoln once said, "If I was given 6 hours to chop down a tree, I will spend the first 5 hours sharpening my tools." That is a very wise man speaking. In trading, we don't win by speeding, we win by waiting. We don't wait to take 10 trades in a day and lose 7 or 9. We win by waiting for great trading setups. Enter the trade and also wait for the results. Patience is a virtue in trading. Patience is our strongest commodity. And to achieve more profits, you must equip yourself with every armor and weapons you will use to compete against other traders in the market, because trading on itself is a battleground. That being known, let's move to the first secret of order blocks and smart money concepts. And before that, subscribe to our channel to become part of the Trading Tribe family. And as you subscribe, turn on the post notification so you don't miss out on our future videos and strategies. If you have a question in mind as you watch throughout the video, feel free to drop them in the comments section, as I will be answering them all. 1. Price gaps. First of all, let's understand what I mean by a price gap. A price gap is the distance and height of a price after leaving a particular zone on the chart. A price gap is important in support and resistance, trend lines, and also in supply and demand. Today let's see the role it plays on order blocks. What makes an order block important is the impact it had on the chart after its formation. This will show us the strength, or the force pushing it up, or pulling it down in the market. It tells you how important the order block will be on the market. The smaller the price gap, the smaller the impact. The bigger the price gap, the bigger the impact when it returns to the order block. And it works this way as the strength of the buyers or sellers after the order block will determine the strength when it returns. The momentum at which the buyers on this chart is pushing the price up from the beginning of the order block is the major component that pushed the market that big. Let's imagine you are in a kitchen, cooking your favorite meal on a gas stove, and as the food is getting ready, you decided to play around with your phone, watching some TikTok videos and replying your crush, in a way that it takes more than half of your focus away from the kitchen. And as your crush sends you a cute picture, you decided to open it, you smiling and blushing. Then immediately you remember that your food is on the gas stove and getting almost done. Then at this point you do what everyone who is really distracted with their phone will do. You hold your phone with one hand still looking at the picture and smiling, and as you unconsciously try to open your pot of stew, you mistakenly touch the body of the pot. Wow, at that point you come back to reality. Even the picture of your crush does not look good to you anymore. And as human will always learn the hard way, it is at that point that you will drop your phone. Find a way to relieve the amazing feeling you just got and refocus on your food. Depending on the touch you felt, your mind will always take you there, and you will never want to make that mistake again. If the touch was light and it was not so hot, you may still pick up your phone and keep replying to your crush. And if it's the other way round, your crush will drop a lot of messages, and you will not even want to reply anyone at that point. That is the same way order blocks work. The order block price gaps are like the hot pot. The bigger it is, the hotter it feels when price returns to the order block. there would be much price reaction to it. But if it is not hot, and it has a small price gap, the market will not take it serious when it returns to the order block zone. Take a look at this example. An order block formed here. Though some of you don't know the real order blocks that work in the market, I will be leaving a link to our order block full course at the end of this video, so don't worry as I illustrate this to you. Now, after the order block formed, the price moved up, and it formed a little price gap and continued moving up, and later the market formed a bigger price gap, which also returned to the order block and moved the price up massively. Now compare this to price gaps and see which one was more profitable. This does not only work with order blocks. Sometimes you see this on your chart, where price keeps touching a particular area until it breaks out and start moving massively. That area is a hot spot, and price has no option than to shoot out from there. Now that you have understood that, let's move to the next secret. The two types of break of structure. The first type of break of structure is the trend changing break of structure. This type of BOS specializes in changing the trend of a market. If you see this at the lowest or highest point of any trend, it means that the market is about to change trend. And how does it operate? I will show you. For this example, you can see that it is changing the trend from downtrend to a new uptrend. This has two characters. First it goes lower than the last low, and then it rises up to break the last lower high, completely changing the trend, and then return to take the last orders from the order block, which will now accelerate the price movement. This behavior happens mostly at the beginning of a trend, and if well understood, you can always be at the beginning of every trend. Imagine you entered here, and you took your profits here. You will scoop a lot of money from the market, and very soon, you will be competing with Jeff Bezos and Elon Musk. Though don't get too greedy, enormous wealths are not made in a day. There is a law of seed, time, and harvest. What you sow is exactly what you will rip from the market. And most times, when you are not careful and understand the market well enough, even the seed that you sowed will be taken away from you by other traders who understand the market better than you. Think of this pattern as though it's a battle move, just like what you see in war movies. The buying soldiers kept marching upwards into the city of the sellers, and they kept pulling and hitting, till they broke the city gate of the sellers and entered into it. After that, they went down and invited the remaining buying soldiers to join them to win the battle against the sellers. They defeated them finally, and took over the territory and named the city an uptrend. And they will be no more downtrend until the sellers overpower them again, and change the trend to their own, and own it once more. And this battle never stops. You will see it on your chart every day. The second break of structure is the trend continuation break of structure. This type allows traders to join the trend on great discounts after a change of trend, as the market keeps ascending up. This type of break of structure is what an order block trader must look out for in a new trend. The trend continuation break of structure focuses more on breaking the last higher high for an uptrend and more on breaking the lower lows for a downtrend. As you concentrate on the chart now and see how it works, you begin to see how it breaks the higher high, then retraces to pick orders, and then move up again to break another higher high and retraces to pick the orders again. This is more like climbing a staircase, and as each staircase pushes you up, you keep climbing higher. The difference is that the market moves in a more sloppy way, more like ascending valleys, and each step is focused on breaking the last high. And reverse is the case for a downtrend. The market moves lower and lower, always targeting on breaking the last lower lows to keep the downtrend going. As you master this, you will begin to see that there are many opportunities flying around in the market daily, and waiting for you to analyze them and enter the trade at will. Keep enjoying the ride of the market till you see another change of trend. Then you switch to the new trend and keep riding. Now, let's observe the next secret. 3. Order block touch. One of the secrets of order blocks is the must-touch effect. This is a must, and you should always wait for price to touch the order block before you take the trade. This not only makes you disciplined, but it will also save you from a lot of losses. On this chart, you can see the price did not touch the order block zone before it moved up again. Many traders will not wait for price to touch the order block zone before they take the trade. A lot of traders will enter somewhere here and join the trade, which they will feel like it's a smart move. And though the market moved well in favor of their trade, what will now happen when they get a surprise like this one? Here the market did not touch the order block zone. And now imagine Thiessen trader entering a position here and getting stopped out of the trade at this point, which then moved down and changed the trend. One tricky thing about trading is going for the things that work sometimes instead of the ones that work many times. Entering the trade before it touches the order block can be great and bound to work sometimes. But what will then happen if you fail many times? Like this one, you should always wait for the price to touch the order block before making your trading decisions. This way you can be sure and more disciplined with your trading plan, and be sure to avoid taking everything that comes your way. Before we move to the last 2 very important secrets, I want to show you something special. After 9 years of trading, I combined all my experience into one trading strategy, filtered out all the confusion that many professional and beginner traders face, and made a remarkable, easy and strong trading strategy for Forex trading, stock trading, commodities, binary options, and any financial instrument where you can use the candlesticks charts. This is a complete strategy, and this strategy will open your eyes to 1. The best trading structures that works in the market. 2. The most volatile entry structures you will analyze every day for block profits. 3. The 15 potential entry candlesticks you use for every structure entry. And 4. The strategic areas where you can place your stop loss and take profit target for tight risk and extended profits. You will begin to notice how your trading game will change as you read this book and practice it on your chart daily. Everything you can think of has been done for you. After purchasing it, you get the video illustration of this ebook with live examples for free. Instead of selling it for the real price of $100, I slashed the price down to $50 so everyone can get it. Check the link in the description box to get the ebook today and start scooping profits from the market. Now let's go back to our video. Time to discover the 4th secret of order blocks and smart money concepts. 4. Order blocks are only used once. Order blocks zones are only used once as a continuous touch, as a particular zone weakens the zone. As order block traders, we use a hit and run policy. Since the market is always moving fast, this policy implies that once an order block is used and there is a new break of structure, traders never expect a new trade from that particular zone again. After a new break of structure, a fresh order block zone will be spotted and drawn. Now, onto the final secret. 5. Order blocks are best analyzed on one time frame. I know a lot of traders like to do a top-down analysis for their trades, but here is the point and why you should focus only on one time frame while trading your order block zone. The order blocks zones are drawn on one time frame and are expected to return to that zone on that particular time frame. Let's imagine you drew your order block zone on the 15 minutes time frame. You don't need to go analyzing it on the 4-hour time frame. This is the mistake. Your focus should be on the 15 minutes time frame. And you can also go lower to confirm your entry on the lower time frame, like the 5 minutes time frame. Don't go higher than the time frame on which you drew the order block zone from. If you draw an order block zone from a higher time frame, you can use the lower time frame to confirm your entry, but you can't use the higher time frame to confirm a zone that was drawn on a lower time frame, else you confuse your trade and make wrong decisions. These 5 order block secrets will shape your order block strategy and drastically reduce your losing trades. Have them in mind each time you're using an order block strategy. You received a lot of values in this video. Subscribe to this channel right now to make yourself a big part of the Trading Tribe family. And as you subscribe, turn on the post notification so you don't miss out on our future videos and strategies. Like I promised, here is the full course video on the real order blocks that works in the market and the strategies to apply on all of them, so you can make profits in the market. See you in the next one.